Good morning, all, and good evening for those of you coming from the US. As we wait for our last few guests to sign in, a couple of announcements related to our event today. First note, please note that this event is being recorded, and during the event, if you should encounter any technical difficulties, please email my colleague. Her email is on the slide right now, but also it will be at the top of the chat box. So for any technical difficulties, somebody will be there to help you. And if you should have questions during the event that you'd like to pose to our panel or our speaker, please do type your questions into the question box. Our colleague Jacqueline will be moderating the question and answer session today. So we really welcome questions. And finally, before I begin, we'd really like to thank our sponsors. Making finance work for women cannot happen without their generous contributions. And so I'd like to thank our leading sponsor, the Bill and Melinda Gates Foundation, our advancing sponsor, Ernst & Young, our broadening sponsors, the Boston Consulting Group, European Investment Bank, Facebook, and the Patrick J. McGovern Foundation, and our supporting sponsors, Art Financial Group, Diebold Nixdorf, Novi, and Whiting Case for their generosity in helping us create this platform. I'd also like to thank Vyhnalek as our contributing partner for amplifying these discussions to an even wider audience around the world. And finally, I'd really like to extend my special thanks and our special thanks at Women's World Banking to our core funders, Australia's Department of Foreign Affairs and Trade, the Swedish International Development Agency, SIDA, and the Visa Foundation for their ongoing support of our work. So that's a lot of names, but we couldn't really do it without our sponsors and really appreciate their support. So good morning and evening all. My name is Christina Maynes and I'm based in Southeast Asia. And just a few brief words about Women's World Banking for those of you who perhaps don't know us or perhaps would like to know us more. So at Women's World Banking, we're a global nonprofit and we've been in operations for about 40 years. And while our primary mission is to ensure that women have access to formal financial services, our ultimate vision is to ensure that women can build a secure and prosperous future for themselves. One thing that makes Women's World Banking different is that we work with commercial financial services providers. And that's so that we can better serve low-income women in the markets they serve. So if we could have another slide, and there's be a map, and it will show our latest projects across Asia. So for those of you who are interested in Southeast Asia, it's on the right. We're doing two projects, solutions projects with BRI and BNI in Indonesia right now. And we're also working with two prominent e-wallets, so Wing in Cambodia and Dana in Indonesia. So it's an interesting dichotomy these days. We're working with very, very large state banks and new wallets that are really taking the storm in their markets. Quite a different kind of institution than we've worked with in the past sometimes, but you know, the world is changing so quickly and COVID has brought many changes. And on the research front, Sonja, who'll be talking just in a moment, she and her colleague in Jakarta, they're working on two really important projects in research. So one is on ongoing in Sharia finance, and the other is focused on women-owned micro SMEs. Both really interesting topics, and the need is being driven out of changes that are arising from the COVID pandemic. And then finally, on the last slide here, I just wanted to introduce our team in Southeast Asia and Sonja, who's joining us from New York today. So we're growing large, and we really are doing more and more to contribute to women's financial inclusion in Southeast Asia. So turning to our event today, just a couple of quick words. Today's event will focus on artificial intelligence, which is revolutionizing financial services across Asia. And as an example of these big changes, I thought you'd be interested to know that this summer, Women's World Banking, we launched our first ever digital solution for a project, and that's with Dana in Indonesia, which is Indonesia's third largest e-wallet, and the solution has to do with domestic migrant worker remittances. So we're changing along with the changes, and what I wanted to say is that There's clearly a lot of potential coming for artificial intelligence in Asia, and using data is really important about that. But there's obviously a big tension between artificial intelligence and data privacy. And in addition, it seems like everyone has a story about how artificial intelligence incorrectly guessed their consumer preferences. And so, coming out of this, I think there are a couple of questions we want to ask today. Is artificial intelligence accurate? And what are some of the unintended consequences of artificial intelligence for low-income women and their access to financial services? And so to start to address these questions, I'd like to introduce now Women's World Banking's Global Director of Research and Advocacy, Sonja Kelly. And Sonja today will kick off our event. So thanks so much. Over to you, Sonja.
Great, thank you so much, Chris, and thank you all for joining us. I echo Chris's good morning, good evening, wherever you are in the world. Like she said, I'm Sonja Kelly. I lead the Women's World Banking research team. And one of our core research questions at Women's World Banking is, where are women in the future of financial services? So the topic that we're talking about today is really important to us at Women's World Banking, and really critical as we think about the future of the industry. Before I dive right in, let me ask where you're coming from. We're going to put a poll up on the screen. If you are multitasking, it will pop up in front of whatever your window is, so you won't miss it. We want to know where you're joining from, and also what kind of organization you belong to. So I'm going to go ahead and leave this poll up while you navigate to it and can choose the region you're joining from and the kind of organization that you come from. I think we've been pretty inclusive with the options, but we have an other option there if you're not able to find what identifies you here. So I'll rely on our team to let me know when we have a critical mass of people having voted. Looks like we have that. And no surprise for most people, it is the morning and they're calling from Asia, but we have pretty good representation from Latin America and the Caribbean, and also from the United States. Very impressed. Those of us who are going to be speaking on this call cannot have voted, and so that is welcome to those of you who are joining your evening. And then we have primarily NGOs, followed by financial services providers, other, and then international organizations, individuals, and donors. So this will be really helpful for us as we talk about this topic today, both as I think about tailoring this conversation to our audience in terms of framing remarks, but also this will be really helpful for our panel to keep in mind. We're thrilled you've joined us to think about how AI can facilitate women's financial inclusion and economic empowerment, and also what to watch out for. I've been actively observing this space now for 7 or 8 years, and I can tell you that it will take our collective skills, imaginations, experiences to really be able to fully harness AI and machine learning for women's financial inclusion and economic empowerment. And this isn't just a topic for data scientists. It's one that all of us can contribute to and consider in some way in our work. So I'm going to start with some framing remarks, first showing why this topic is important enough to keep our attention. Then I'll turn to some anecdotes of what it might look like in financial inclusion, share a little bit about Women's World Banking's work, and finally end with some thoughts on how AI and machine learning can help close the gap for women in financial services. As I share these remarks, I invite you to actively participate by submitting questions that we can have our panel consider in their conversation. And so you can go ahead and do that with the Q&A function at the bottom of your screen if you haven't yet found it. And it looks like we already have some questions coming in, which makes me really excited. So AI and machine learning, as you are probably very aware if you've joined this webinar and you have any familiarity with the topic, they're making financial services faster, cheaper, and more targeted. And more than that, new ways of analysis are opening up new possibilities for banking, and we'll get into some of these. You've probably experienced this in your own financial life. Chris referenced people in her network mentioning that their financial services have guessed their consumer preferences. You've probably gotten a text message at some point from your financial institution saying there's been fraud detected, and that was likely done using artificial intelligence. We see instant credit approvals that are done with underwriting using AI and machine learning. You've probably also heard of auto trading in investment portfolios. And most firms now are using AI and machine learning. We know from research from Deloitte and the Economist Intelligence Unit that 70% of financial services are using machine learning to predict cash flow, fine-tune credit scores, and detect fraud. We also know that almost all, 86% of financial services executives plan on increasing their AI-related investments through 2025. And this is the most interesting, which is why I put it last, so I have the license to be able to talk about it a little bit more. What's really interesting to me as a researcher is when this survey from the EIU asked firms what their metric for success of AI and machine learning was, it was customer satisfaction that was the metric for success. And I see this as a very positive thing as we're venturing into this world of efficiency and faster, more targeted services. Financial services companies are considering customer satisfaction to be the top benchmark for success. If you're not convinced yet that this is an important topic that we're discussing today, this might convince you. Both the European Commission and a set of regulators in the US are really tracking this topic. The US Fed, FDIC, Credit Union Administration, and other regulators just recently, a few months ago, put out a call for information on AI and machine learning in financial services. And the EU put out a proposed regulation for comment a few months ago on AI with relevance to financial services. We've also heard from our colleagues across the world that there are new regulations on this topic. In Mexico, for example, they just put out a circular that said financial firms are allowed to collect GPS data and use it for AI and machine learning, but only for the explicit use of fraud detection. So AI is about to become a major part of banking sector regulation. So what does this look like? Well, let's start with the data picture. Let me put up a poll, another poll now here, so that you can guess how much data will be created this year. We've got 4 options there. How much data will be created this year in 2021? So you can go ahead and choose. There are 4 choices: 74 zettabytes, 100 zettabytes, 13 zettabytes, or 1 zettabyte. So when we have a critical mass of people, let's go ahead and close that poll. Okay, so most people guessed 100 zettabytes, which is a really good guess because it is the top number, and that's that tends to be a way that people write polls. But the answer is actually 74 zettabytes. And just in case you don't know what a zettabyte is and you had to look it up like me, it is 2 to the 70th power bytes. This is a huge amount of information. Another way of saying it, it's 1 sextillion bytes. And so there's just an enormous amount of data out there in the world. And this is important because AI and machine learning relies on data, and it wouldn't be uncommon for a company that's using big data to look at credit scoring. It wouldn't be uncommon for them to say they had 15,000 variables, or sorry, like 1,500 variables that they're collecting every day, and therefore thousands and thousands and thousands of points of data on people. We conducted a study last year where we looked at some of the largest digital credit companies in the world to see what they were collecting. And you can see here on the screen what they are collecting to feed to their AI and machine learning models. What we found was that nearly all of the digital credit companies we surveyed collected data on network connections and network access and receiving data from the internet. Most were able to read the content of photos or files or media or a calendar and modify or delete these. Almost all were able to know GPS location, read storage information, and know the phone status or identity. And alongside of this study, where we quantified the number of companies that were using this kind of data, we also interviewed these digital credit companies to learn more about how they were using these data, which is, I think, the important point. And so I want to explain how they're using it so that you can see the relevance of these data to creditworthiness. Pre-pandemic, GPS location was a great proxy for the amount of investment a person had in their business. So if a person spent a lot of time at their business location, they were likely to be someone who was more invested in the business and therefore a better repayment risk. Companies were also using the contact list in phones and comparing aspects of contact lists to likelihood of repayment. So for example, did the person capitalize the first letter of names? Do they include both first and last names? How many contacts do they have, indicating the strength of their social network? Also, knowing whether someone only uses apps while connected to the internet or whether they use apps on mobile network indicates whether their finances are tight and if they have a prepaid plan versus if they're on a pay-as-you-go plan. Most directly, does the applicant have a banking app on their phone? Do they get texts from their bank showing that they're active with their bank? What is the bank balance and frequency of transaction if the digital credit company, can read text messages and emails? All of these things can be predictors of creditworthiness for first-time borrowers who don't have a strong credit history to lend against, which I think is quite remarkable. So our work in this area, in partnership with data.org, which is a collaboration between the MasterCard Center for Inclusive Growth and the Rockefeller Foundation, we are partnering with LendingKart in a shared goal of increasing credit availability to women entrepreneurs by increasing representation in the data pipeline and ensuring that algorithms are fair to women applicants. And this is one example of what we're doing under this work under the data.org grant. We're also interested in general to know how to use AI and machine learning for women's financial inclusion and how we can empower the industry to address open questions as well with tools. We also did some work in the past year thinking about potential for bias in algorithms. We created a synthetic data set that financial services providers can play with to test their own bias in their lending and think about how to mitigate bias. And you can see that in the report that we've put up here on the screen that we'll link to in the chat. In all of this work, we remain excited about the potential for AI and machine learning to usher in a more financially inclusive and economically active world for women entrepreneurs. We know that this will require intentionality and care on the part of financial services providers. For example, understanding what data are being collected and how those data fall along gender lines could unintentionally or intentionally have an impact on women's access to credit. Also, being aware of gendered access to the technology that generates data. If women are less likely to have mobile phones and less likely to have a smartphone, which we know from GSMA, what does that mean for models that rely on these devices? So as we work through these questions as an industry, we continue to see new models create new channels for engagement with the financial system. And like I said, this is a conversation that's not just data scientists, it requires all of us. I'm going to end with this slide because I think it's important as we move into the panel to show the stakes. Women-owned businesses are the majority of micro enterprises and a third of small and medium-sized enterprises. We know both anecdotally and from the academic literature that in traditional credit decisions, women face discrimination, getting smaller loan amounts or being penalized more harshly for their mistakes. And I'm very willing to share that literature. If you're interested, I can put it in the chat during this webinar. I think women's high repayment rate is a great example of this, that women's high repayment rate relative to men's is an indicator that women could have gotten larger loan sizes, or that institutions could have included more riskier women borrowers in their portfolio. The gender credit gap is estimated to be $17 billion, and women are more likely to be thin file customers, in this case, meaning they are less likely to have a credit score than men. But don't take my word for it. As we enter our panel discussion, I'm really listening out for ways that I, as a researcher, can continue to think strategically about how to leverage AI and machine learning very specifically for women customers and women entrepreneurs. And like I said, today we are joining a conversation still in progress, and I have high confidence in our ability to figure this out together. So with that, let me intro Janet Truncale. She's the Vice Chair and Regional Marketing Partner of America's Financial Organization at EY. We at Women's World Banking know her as the chair of the board, and I'm really thrilled that she's going to be leading our panel today. So over to you, Janet.
Thank you, Sonja, and thank you so much for the fantastic research that you're doing on behalf of Women's World Banking, and also for setting the stage so eloquently for our panel discussion. With 1 billion women globally outside of the formal financial system, I'm personally very proud as the chair of how Women's World Banking is really thinking proactively about how innovation like artificial intelligence can help us build a more inclusive digital financial future. In my role at EY as the Vice Chair and Regional Managing Partner, I see firsthand on a regular basis how gender equity and digital transformation really intersect with enormous consequence. According to the World Economic Forum's Global Gender Gap Forum, only 22% of AI professionals globally are female. Think about that. Only 35% of STEM students in higher education globally are female. Yet at the same time, it's estimated that by 2025, 95% of all customer interactions will be driven by artificial intelligence. And you heard Sonja say, 86% of financial institutions are planning on making significant investments in this area. So while I'm incredibly optimistic about how digital transformation can accelerate these important efforts, we absolutely have to continue to raise awareness around the current landscape, as well as potential pitfalls that gender bias can create. And so that's what we're here to explore today. So without further ado, I want to introduce you to our esteemed panelists that are going to join me in this discussion. So first we have Claudia, and we're on a first name basis here in the community of financial inclusion. So Claudia is the Vice President of Data and Society at the Patrick J. McGovern Foundation, a 21st century philanthropy committed to bridging the frontiers of AI, data science, and social impact. Claudia's career has been all about using data for decision making, first in the financial sector in Germany, and more recently at the foundation, where she and her team are using foresight approaches and innovative methodologies really to identify the most promising ideas that could be shaped into the next $100 million initiative. And Claudia really looks at how to use data and AI and how that will affect vulnerable and marginalized populations, and how their voices and rights need to be reflected in the design and decision-making processes to harness the positive potential of these approaches. So welcome, Claudia. Next, we have Harsh, the co-founder and CEO of LendingKart. Thanks for joining us. Harsh plays a vital role at LendingKart, building and scaling a world-class team that designs innovative credit solution and delivers growth for our micro, small, and medium enterprises. A pioneer at heart, he's driven to assist small businesses who, despite being business owners, despite being creditworthy have been not served by existing lenders. And that's going to be a real interesting part of our dialogue. And then last but not least, we have Pavel, who joins us from private equity and venture capital. He's also the former CEO of Home Credit Asia. Pavel is based in Singapore, has 3 decades of global experience as the chief executive officer and chief risk officer in consumer finance businesses across Europe, Asia, and the US, as well as fintech investments. At Home Credit and in his fintech investments, Pavel's been passionate in working to improve financial literacy and access to financial services for the unbanked. Women have been the significant focus of these efforts, with financial products designed and distributed in tailor-made channels. So welcome, and thank you for joining us early morning and late evening. But let's jump right in. And first I want to set the scene. So let's step back for a moment and look at how the evolving data and technology landscape has impacted financial services over the past decade, both for mainstream institutions as well as the fintechs that have emerged as both competitors and collaborators in an industry marked by disruption and transformation. So first, I'd like to explore what this disruption has meant for low-income populations around the world, especially for low-income women in emerging markets. So Claudia, I'm going to start with you and really want to talk about, for our low-income women that we've been talking about, are they disadvantaged by their lower likelihood of technology access, the thin file customers, or are they advantaged by new points of entry? So what are your thoughts on that, Claudia?
Thanks, Janet, and it's great to be here. Hello, everyone, wherever you might be. I mean, it is both, and I'll talk more about that. But I think building on Sonja's presentation and what I've seen over the last 10 years, I mean, I think the change has been tremendous, and it's definitely been for the better. And I think one thing that I want to highlight from the beginning is it's not only about data and AI and technology. I mean, there have been a lot of other things that have basically enabled that disruptive force that has taken place, and it's mobile phone penetration, it's changes in regulation, and it's also changes in cultural norms that have allowed women in particular to access financial services to a greater extent, not sufficiently, and I think we will talk more about that. But when I think about 10 years ago, when I was looking at financial inclusion, we were looking at savings groups based on a paper ledger. And while those savings groups still exist, I think we are today talking about e-wallets. We are talking about kind of a friend in Jamaica or from Jamaica living in the US topping up his mother's cell phone in Jamaica, and so sending remittances. And I think all of us probably have similar examples. But if I would kind of speak to 3 areas where I think disruption has really taken place. I mean, I think there overall the numbers of low-income populations and their access to banking services who didn't have any access to banking services before. So just the total number. Then I think secondly, and Sonja talked a little bit about that know your customer. So using alternate data sources to understand creditworthiness. And I mean, I'm always struck by that example that was shared with me a couple of years ago. I think when you think about these big produce markets in different parts of the world, and you have hundreds of women traders sitting on those floors, and who do you identify who's most creditworthy, and kind of thinking about using, different information from their mobile phones as well as psychometric tests. I think that is, kind of really has advanced women's financial inclusion very greatly. And the last point is really the types of access or the types of products low-income populations and women have access to. I think, again, 10 years ago, we mainly talked about savings. Now we talk about credit, we talk about insurance, we talk about remittances in a different way, about government to citizens payments, maybe sometimes even cross-border business for smaller female-owned activities and enterprises. So those are all changes. Having said all that, and I am overall very optimistic and very positive, women have not benefited to the same extent as men. At the heart of that are a lot of cultural norms and societal norms, kind of perpetuating existing biases. I think also that women, when we especially look at alternate data sources, different needs for data privacy or kind of a specific needs for data privacy and appropriate services that are, some services are not designed necessarily for women by women, and that is hopefully one of the next frontiers.
Yeah, no, that's great. Thank you for those points and your balanced view, your balanced optimism as we go forward. So let's start to explore the potential in terms of the additional human capital investments that we need to make sure that artificial intelligence as well as machine learning are driving financial inclusion. So Harsh, I'm going to turn it to you for a moment and really explore how financial services providers can ensure that women are both builders as well as end users of AI-enabled products and services for the future. So thoughts on that?
Sure, Janet. Thank you guys. Thank you for having us here. And pardon my early morning face. I'm not an early riser, right? Essentially, but trust me, I won't let my answers affect my early morning thing. Thank you guys, and thank you Women's World Banking for allowing us to be here. I think we've been learning a lot from you guys while running our businesses for funding small SMEs in India and also trying to go to Southeast Asia. We've not been inherently aware of a lot of things which you guys have made us aware of. So I think like Janet and Claudia, you guys suggested, basically in developing economies right now, what we are realizing is affordable smartphones and basically low income or low cost data plans are making people more and more go from lack of information as individuals to maybe data rich individuals, right? It's only on the financial institutions of how they want to go about using it and making worthwhile use of that, all of that data. Janet, like you suggested, AI can help improve things, and basically AI is not like abracadabra, right? Basically you don't have data and then you apply AI on it and the output is generated on it. Basically human is required, right? Human with an understanding is required. And this is again an iterative process, right? It's a continuous loop, data loop process where you design a certain product, you go out, try it out in the market, you get feedback for that product, and that feedback is again looped in the product. And then algorithms keep on improving all of that. So I think we all need to do that. I think we've been blessed in a generation where data, rather than being a scarcity or scant resource, is now becoming abundant. Only thing is what data to use, how much to use, along with, I think, data privacy and security norms and everything that we all need to follow so that we don't fringe upon a lot of those things as well. Overall need to be built, developed. So I think all human capital investment will be required in equipping people, right? Equipping women folk or other genders as well, in equipping them basically to make them learn the new techniques, maybe data science practices, maybe how the algorithms and algos and data work, and take them forward. So I think it's a continuous investment we all have done. We've got an ecosystem where data is rich. Now continuous investment in them will go ahead and help them. I think the second question was that how women can be both builders and enabled users, right? Janet, do I answer that as well? Okay.
Right, that's right.
I personally believe, and I come again from an enterprising home. I have a mom that's actually involved in these activities. I have a wife that's actually involved. I have a sister-in-law that's actually involved. So I'm so proud of all the work that they do, right? But I also have gone through instances, which a lot of our fellow women entrepreneurs go through, where right kind of services, right kind of financial products are not designed for them. But I personally feel that if we go ahead and like I think Sonja also mentioned in a presentation, 1/3 of SMEs are run by women entrepreneurs, and especially in the emerging economies. And that's very true. I see that day in, day out. I think what we need to do is equip those people, make them partner, right? I think I see a lot of, I have a large family as happens in emerging economies, and I see a lot of my relatives and neighbors participating in these kind of businesses, learning these practices and going ahead. So I think we need to equip them more, bring them more in this focus, design products for them, take feedback from them and work with them. That's a continuous process. So I think that's a gradual investment. And I think along with that human capital investment across all phases, partnering with people, partnering with them, working with them will solve for it.
Oh, that's great. I love to see the familiar female influences that are impacting the work that you're doing at LendingKart. So your wife and your mom, love that, front and center.
Yeah.
So Pavel, let's get you involved in the conversation as well. So what's your view in terms of how private and public entities are going to support these efforts from an investment perspective?
Okay, I will start with private, and we have later on the question, but I will use part of it. The development is huge, at least from my point of view, and it all goes with the accessibility of the data. And the accessibility of the data and its development is obvious all around the world, including India. I remember when I was launching India, I was doing the research what is accessible in India, and the mobile phone was one of the most accessible tools, and actually including smart, even though that it was not advanced like Apple and whatever, but still smartphone. So from this point of view, there is definitely a smaller gap between men and women. The discussion about if the women is disadvantaged, I may tell you any scorecard or model which was not influenced by a human being was always advantaging women, because simply they are more responsible by nature. So the development which I see is more about how the banks are regulated, how the industry overall is regulated, because it's still very traditional, and I believe it needs to catch up with this development. We still are in countries where it's given the minimum amount for the loan, minimum amount for the salary by the regulator. You still need to bring the wet signature of the salary slip, and simply it makes entire process incredibly expensive. And of course, those ones who are not having the credit history are disadvantaged, and that's the discussion about the FinFi. By the way, I developed in the US the JV with Sprint. We were exclusive mobile phone financiers in the US. And I may tell you 80% of the FinFi, doesn't matter if it is men or women, were good people with good credit when we granted them the loan. That's the learning. And how you can do this is not using this traditional data, because the traditional data are looking for the history and are looking what's your credit probability to pay the credit. Sorry, I should say it slightly better, but simply what's the probability to repay the credit. What the fintechs and these new companies are doing, they're looking actually what's your reliability to repay, which is very, very different point of view. So we are combining this traditional data with this new data like telco, like e-commerce data, like your lifestyle data from the social networks and so on. And of course, there is the balance, how you approach what you can access versus what you cannot access. And it was pointed out during the presentation. And I would say the more you disallow to access because the data privacy, the more those ones who are not so well educated and so on will be more disadvantaged. Because the difference between old traditional model where you did the community-based lending or based on this data and this evaluation of the salary and so on, there was clear discrimination. Why, if you are looking for the models which is telling you what's your reliability to repay.
No, I think those are great points. Those are great points, and I think it's right. This concept of this other information that you could potentially have access to that Sonja referenced in the report, and I know many of you will want to read the full report that's provided in the chat. But I think that's important, that balance between the traditional data and the new data that really hones in on that reliability. So great points there. Claudia, I'm going to turn to you for a minute on a topic that's near and dear to my heart in my everyday to day, and that's the encouragement. You heard my stats earlier about the number of women that are pursuing STEM studies and careers. We already talked about the fact that it's not enough women kind of pursuing these careers, and you need more people kind of in that to help the end result on some products. So what are your thoughts on encouraging women to pursue these type of careers, and at the same time, for the employers to be really driving recruitment of women for tech careers in financial services? I have my own thoughts, but love to hear your thoughts on that.
Maybe before I go to the details, building on Pavel's comments and adding maybe one aspect that directly, I think, connects to the question of the number of women taking on STEM studies. I mean, I completely agree on the aspects raised around conventional data sources and alternative data sources. But I think the question that Pavel rightly raised is the question of, do we just baking in our existing bias into kind of the data and analysis that we are doing, which means that this might not favor women. And for that, we need representation, and that is critical. And how do we get to representation? And I think it can't only be junior representation. I mean, yes, we need to develop more of a pipeline of women that are data scientists or data analysts or data engineers, but also data leaders we need at every level of enterprises or fintech organizations, women. And I think, how do we get there? We get there through kind of exposing girls at a young age. We are getting through that encouragement by parents, making it fun, having role models that look like us, that look like the women that we want to bring into those positions. I feel it's kind of having special kind of trainings for women. Those are all elements. I think the one other point that I wanted to make is, I was a woman. My first career, I had my first career in the financial sector as a woman, and definitely still remember how I was the only one in the room, and others in the audience might have similar kind of memories or kind of current experiences even. And but I also want to be careful that women are more than 50% of the world's population, and we are not a homogeneous group. So while I represent a woman, or I am a woman, women come in many kind of with many backgrounds and kind of representing a lot of different lived experiences. And so thinking also about diverse women that we bring into different roles. And maybe lastly, as customers, as consumers, as investors, kind of how can we push for kind of more diverse and more women inclusive staff in many places.
Yeah. So Harsh, why don't I get your thoughts on that too? Either piece of it, the encouragement going into some of these fields as well as their recruitment. And I know, from our perspective at EY, I can't hire enough women in technology for our business. I just wish there were more out there to hire. So your thoughts there?
Yeah, sure. Thanks, Janet. So basically, I totally agree to what Claudia suggested overall, and like Pavel also suggested, that we have alternate data sources that are building up, right? Whether it's social data sets or utility data sets or mobility data sets, all of these data sets are getting built up. We are now almost turning each and every individual, either in emerging economies or developed economies, as data-rich individuals. The only part where we are kind of currently lacking is people who work on it, actually, right? And like we just discussed in the other question of human capital investment as well, we need to have proper people understanding those data sets and working on them. And what better essentially than the people who are going to use those products, working on them. Like Claudia again suggested, 50% of world's population is women, so we can, there's no way you can leave them out, right? For any financial institution, it's not possible, right? And I think all across our journey, right, whether it's either in internet, e-commerce, mobility, we've realized that there is a different set of requirements, right? Even in mobility businesses, there is a very different set of requirements that are there, which the women invoke, or the gender requires, right, for services. And if somebody has to succeed over there, either like in financial services, either it's an onboarding, servicing, or fulfillment of these products, right? And what better than doing that? I think, again, like you suggested, yes, in STEM, there are still not too many people. So we need to encourage them all. I think the courses need to be specifically designed. I think rather than just continuing and have common courses, my personal belief is we should take one step forward and start having specialized courses for this segment, where specialized courses are designed for their understanding, for onboarding, for UI, UX, and all those kind of things. So these specific things, once they start happening, once the institutions, larger institutions start appreciating them more, and then a push from all of us towards us in encouraging people and encouraging women folk going and doing these courses and then joining strengths with us, right? And like you said, Janet, I totally appreciate the fact that I would love to have a team of my own colleagues essentially evaluating our products and giving us feedback on all of them. And I really value, because a lot of feedback on UI UX far better comes from my female colleagues than our men colleagues, right? We are used to a lot of things, but female colleagues think far more richer, far more better, far more stuff like that. So I think we all need to encourage it. So my suggestion would be, let's move one step forward, have special courses for them, specially things designed for them, and then encourage them to pick it up.
Yeah, and I think that's important. And going back to what Claudia said too, we've got to start younger. One of the things I know at our own organization that we're proud of, we did a venture with Tribal Planet to do a gamification platform for like 13 to 18-year-olds to really drive kind of that excitement about STEM careers early on. I'm going to start recruiting, by the way, at 13, 14, 15 to get ahead of the curve to get them to join our organization. Harsh, I'm going to stick with you for a minute. We've touched a little bit throughout so far about the risks with artificial intelligence, the risks with machine learning. So as our community with financial inclusion, what do we need to be looking out for in terms of potential risks as we start to look at these new technologies and move towards our inclusion goals? So again, what do you think about there in terms of keeping top of mind for the potential risks?
Sure. So Janet, basically, I want to answer this question from two aspects, right? One is the end user overall, right? What kind of risk do we see when we give money or when we interact and design a product for the end user? And second is, how do we ward off from the pitfalls of excessive use of technology and everything? So from the first front, Janet, basically from customer perspective, I think we are designing a lot of newer things, right? And a lot of this will be kind of new to credit or thin file overall. We need to ensure that that in case like in we are in lending business, we need to ensure that we empower them with right loan amount, right? We don't over leverage them or give them too much, right? So that they are not able to pay it up and everything. That's very much required. Secondly, we've also realized that products need to be designed properly as an experience, right? We've sometimes had certain products which we felt super positive about. We went ahead and launched them and scaled them up, and then we realized that it's not working, right? So again, the important part was that you need to design these products properly, test them, let users also experience them before you scale them up, right? Because when you're doing both these things half-heartedly, you're not only hurting yourself, you're hurting the users as well, right? Overall, so that's one. Secondly, again, across the conversations, Janet, we've heard that there are inherent biases, right, across businesses. So if you look at, if we say that 1/3 of MSMEs are still run by women, 2/3 is still run by men overall, right? And again, the biggest problem with AI and ML is that you feed in the data and the output represents the data, right? So you feed in a certain sample set in them overall, and the output will be representative of that, right? So certainly what's happening is you have a certain sample set where representation of a particular product or a particular segment or a particular region is less, then that region will keep on becoming less. So currently what's happening is for women entrepreneurs, we don't have right kind of products and services designed, right? So the more and more you feed on the data, the lesser they will become, right? So we need to be cognizant of that and ensure that a proper sample representation of women folk in using this data sample sets that are used for AI and ML is ensured, right, for each and every organization. We've realized this across multiple steps in our journey, Janet, and we've been very conscious of this pitfalls of AI and ML across our journey, which needs to be ensured. So I think these are the risks that we need to go ahead. Further, I think what's And as we go ahead and build ourselves, I think, Janet, everybody who says AI ML, right? And there have been models as well. It's one like logistical regression, right? That's getting used for each and everything, right? People are using it for onboarding, servicing, fulfillment. But my suggestions would be there are better methods, right, of identifying the non-linear relationships and stuff like that. That could be random forest or something like other techniques overall, which gives you better data. So I think equipping people with all these things and staying on top of these kind of stuff and then building stuff might be much better.
Yeah, no, I mean, a lot to think about there. And I appreciate, the comments there about the unintended consequences. We want to make sure that we're fair lending. We don't want to, overlend. I think that's critical to think about that. And I also think it's important, going back to your comment, right? You want to make sure that you're designing something that's going to be used. It goes back to your point of you'd like to have more women helping design products for the use by women. So I think that's great. Pavel, I'm sure there's many more that we haven't touched upon in terms of the risks. Pavel, just your thoughts here. We talked about the risks. Now, what about the safeguards that we can put in place to make sure that we're not repeating mistakes or making new mistakes with the bias against women with some of these new tools?
Thank you, Janet. Before answering your question, I still want to comment on the inclusion of the women in AI, because I believe this is actually, for me, the most important topic in this discussion. Because for me, I was running many years quite big data research or simply mass team, doing all these scorecards and so on. And I may tell you, the teams were very different by the not even states, but by the regions or even continents. And I may tell you, for example, in Europe or in Russia, there were 50% women, 50% men, because it goes with something totally different. It goes with the access to the education, and it goes with the culture. And it starts really young, and it's also the choice of the women. I think you know that you are slightly different than the typical women which we simply see everywhere else. And I believe this is absolutely critical, and it starts with this, with nothing else. Because otherwise, I may tell you, when I got this 50-50 in certain areas, the women were better because they are more detail-oriented, they are more precise, they are simply more reliable, as I was saying, and that's why the outcome of the model was better, because you may have the best model, you may do the gradient boosting and random forest, which was mentioned here, and whatever, rubbish in, rubbish out. So it's much more important how you work with the data which goes into the model, and I'm starting to answer your questions which you gave me, then what kind of the model, and if you use the most modern technology or not. Actually, the most modern technology is quite dangerous if you don't know how to work with the data, because to get the bias of the gradient boosting is much more easier than to get the bias in the logistic regression. So from this point of view, for me, it's not about the models and the development and the computing power and how many data and which data. I wouldn't restrict actually even the data. It should be the decision of the customer, which data they want to provide. But it's more how you are working with the data, how you are looking, what this data are telling you about your selling process, as Harshvardhan was saying, and what's the feedback, and you need to clean up the data which goes afterwards into the model. And I may tell you afterwards, you actually want to have the model biased, because whenever we did this kind of the work properly, I cannot comment SME, but in the retail lending, the women was biased in positive way. So don't try to change it through the regulation, because you will be harmed by us as a man. And by the way, this situation happened. Remember the UK case on the insurance, where there were complaints that they are not same. And the result was that actually the prices of the insurance for women were going up because they were punished to get the same model like men. So this is for me the answer which I would give to this question. And it's also a little bit controversial that the regulators should think about these things. And I think more than regulators, I rather should say politicians should think about it very, very properly if they want to support it in the right way.
Yeah, no, I appreciate your comments there. So we're going to take a little bit of a break here to take a polling question and get our audience involved in the discussion here. So if we can pull up our polling question, and then I'm coming back to each of our panelists to get their views here too. So your thoughts, this is easy. Is the financial services community moving too fast or not fast enough? Or perhaps you think it's just right. So let's give our audience a moment to share their perspectives. Don't let us lead our panelists in their own, but I have a feeling I know where our panelists are leading on this one. So if we can get the audience to answer. Too fast, not fast enough, or just right? So Claudia, I'm going to ask you to get your answer ready as we pull up these results. Let's see if I'm right in my thinking. Yep, not fast enough. Actually, I thought it would be much more overwhelming to not fast enough. So we have some cautious folks here as well. So at least just under a third think too fast. Over half not fast enough, and then the remainder just right. So your thoughts, Claudia? How's the financial?
I'm with the majority here, and it's a gut response. I think there is a lot in terms of risks, and Sonja said it so nicely about caring and intentionality that's required here, and I completely agree with that. But I think from a perspective of what are we losing out on, my response is we are not moving fast enough. When I think about not only what does it mean for women, but what does it mean for societies to not benefit from that economic productivity for the families. We know what crucial impact it has when you have when women have the opportunity to become even more successful female entrepreneurs, the implications that has. And broader access to not only savings and credit products, but insurance products. I mean, we know how many families go bankrupt because of health emergency. So, I mean, thinking about all those aspects, I think I feel definitely a strong sense of urgency.
Yeah, I would share with you as well. And after everything that we've been living for the last year and a half, I also worry, right? I mean, there was an opportunity in the last 18 months with some of the downturn to hopefully invest even further to move us more significantly ahead. I know many companies took the opportunity to do that, others did not. Harsh, your views on that? Where would you have fallen out in that poll?
Yeah, so Janet, I have a mixed response. I kind of feel that in developing economies, what we are doing is we are reasonably fast enough in designing products overall, right? Maybe because of the payments data now being available, mobile data being available, and access to smartphone, so the products are there. I won't say that we are still at the top where we want to have the kind of products we are there. But I think what we are missing out heavily is on adoption of them, right? The products get launched, but somewhere across in execution, they get lost, right? The utility of those products, the experience of those products, right? And I think that's where, again, our entire discussion on having women folk design those products, work on them, experience them, and then launch them would have been much better rather than just designing products for the common group, and then utility and adoption of it isn't happening that way. So I think mixed kind of, I would mostly rely on the fact that, yeah, we still need to go fast, but I think designing is happening and launch is happening, but adoption of it still needs to pick up a lot more than we are currently doing.
Okay. And then Pavel, I'm going to turn it for you for your thoughts on the same question. Where would you have fallen on our survey?
Okay, I will be probably a little bit controversial again with my previous speaker. I think the development, at least from my point of view, it's super fast. If you would think 10 years ago, what was the access to the credit in the countries like Bangladesh, India, Indonesia, Philippines, and unsecured credit specifically, you would say zero. Actually, home credit till today in Philippines has 90% of the market share because they are the only one who are doing unsecured credit. So the development from my point of view is amazingly fast because the access to the credit increased dramatically. Everybody who has what kind of the smartphone today has the access to the credit. The issue which I see is different. The issue which I see is how we are simply designing the stuff that we can further accommodate more customers than before. And this is going back to balancing the regulation with the access, because any regulation is restricting the access. And especially, and I think it's role of the fintech. Home credit was actually the one, why the home credit used to be 10 years so successful in Asia, dominating all the markets, where because we were the first who were working with non-traditional data and we didn't need it, credit bureau. When we launched Vietnam, when we launched Philippines, there were actually no credit bureau existent at that time. And we were still able to run the models and underwrite, not over that, and develop the credit bureau history for the customers. And it was because we are lenders of small amounts. Our initial product, which we were financing, was actually a smartphone. That was the value proposition. So we created further access. And that's the thinking which we need to further stipulate, how actually by the new regulations and evolving the things and using the data, we properly balance the data privacy versus limiting the access. Because at the end, the customer whom these companies who are usually regulated cannot serve, he still needs the credit. So where he will go? To the loan shark, which is not regulated.
Yeah, not a good choice. Okay,
Exactly.
so I have one last question for this group before we'll open it up for the audience. And that's really about looking to the future. So Claudia, I'm going to come back to you. And so how do you view, kind of the future for a hypothetical woman customer, and what do you think that artificial intelligence, machine learning will unlock for that woman customer 5 years from now? So I'm really asking you to think out of the box here, 5 years out. And 5 years in this environment is a long time. So lots can change. So your thoughts there?
Maybe my colleagues have more revolutionary ideas, but I'm thinking broader access to a broader range of products that are designed specifically kind of for women's needs, clarity for how data is being used to, for example, establish credit scores. So to have that in a way that is one can look at and understand, comparison of different offerings. So I'm thinking about maybe more on, about infrastructure issues, data portability. So how can women, even low-income women, basically shop around for different products and services more easily? Are there other digital identification infrastructure services that can be provided that would make that easier? So those are kind of some of the elements. I'm also hoping that we're making further progress in terms of cultural norms that allow more women or give more women easier access to just the tools that we need to kind of establish a banking presence. I think those would be some of the things that I would like to see and that I think we can see easily within a 5 years time.
Yeah. Do you think it will take 5 years?
I think when it comes to cultural, I think I'm mostly thinking about, cultural norms and societal norms. I think that is the piece that will take longer, and I think that's also what we have seen in the past. I mean, it will be interesting to discuss maybe, has COVID changed some of that, because I feel digital access has definitely been accelerated, but I don't think necessarily it has enabled women to really catch up to men in a more significant way.
Yeah, well, thank you for that. Harsh, I'm gonna have my last question for you, and I'm really asking you if you're an optimist or pessimist here. But if we look out over the next decade, what do you see as the state of financial inclusion for low-income women in emerging markets? So what are you thinking out 10 years? Are you optimistic?
Super optimistic. Janet.
I'm leading the witness here.
Yeah. Being a founder of a fintech startup, it has to flow in my blood, right? Day in, day out. There's no choice. But I think the way things are moving, and Claudia touched upon a lot of those points, right? The way society is moving, the way I think I've always believed that maybe COVID can be a tipping point for a lot of emerging economies, right? I think we were all struggling for the fact that if our per capita income doesn't go beyond a certain reach and range, access to digital will be limited. But I think with COVID, I think a lot of those thought processes have changed. A lot of larger institutions are now willing to go, rather than touch and feel and meet and greet and all those kind of stuff, they're going to go digital, and women entrepreneurs or women businessmen or women folk can get much more access. So for me, Janet, if you ask me in 10 years, if we start to reach a fact where we can have personalized and customized products for each and every women folk, it'll be wonderful, right? It'll be beautiful for me to see my family members get a particular loan amount with the risk pricing, with the tenor, with their businesses, an insurance amount based on their history, an investment product considering their age profile and everything. It'll be beautiful to see. And the way Pavel also touched upon, right? The way data is moving, the way access to digital is moving, I think all of this should be possible. Whether it takes 2 years, 3 years, 4 years, or 10 years, I don't know. The way things are moving, it's right now, it's too fast to say. But if you ask me, 10 years or 5 years down the line, we'll be in a much better place, a much better world overall. I am 100% sure of it.
That's great. I appreciate that. Okay, so now here's your chance for our participants to have access to our esteemed panel. So I know that our friend Jacqueline from Women's World Banking is going to help us elevate the questions that have come in from our broader participant group for our panelists. So Jacqueline, are you there, and are you ready to go?
I am, and thank you to all our participants for the great questions. The first set of questions came from a few different participants asking about the specific criteria or variables or data sets that financial service providers can use to make finance more inclusive. And one specific question that kind of went along with this is, can we mitigate bias if we're using data from mobile phones where there exists a gap given the digital divide? And won't data inherently overrepresent men in that case? And so this was just a general set of questions for all the panelists.
Okay, it looks like Pavel wants to go first.
I'm happy to start because the last comment caught me. Even though that the data overrepresent men over the women, this is statistics. And there is enough data which is telling you if the women is repaying back or not, or man is repaying back and not, and with what kind of the other data this behavior is combined. Or as you are looking for the reliability that this person will simply repay back, you will be very, very surprised what I will say. Actually, the first scorecard, which is good enough to start business, it's enough to have around 2,000 data points. And out of these 2,000 data points, if you have around 15 to 20% defaults, and you can build the scorecard. So the answer is this is irrelevant. So there is, if there is less data of the women, simply this data is good enough. And as I was saying before, actually this data are telling us all the time that the women is better than men in the repayment. So I wouldn't be worried about this part of the question so much. For me, what I was saying is super important is the culture, and simply start today to work with the data and use the statistics properly, that simply the people who are working with the statistics is not making the statistic biased. That's the most important. And that's going back to the culture thing which we are discussing.
So Harsh, Claudia, any different perspectives or unique perspectives to share on that question?
No, I mostly agree with Pavel, essentially that there has to be a sample representation. And I think with the population so large and data rich overall happening, I don't think we need to worry about those biases. Only, like Pavel suggested, we need to work on those things and be cognizant of those things, that those things can come across our journey, right? But I think that there's sufficient enough data to design models, right? Overall, and we've gone through that journey as well, right? The initial days when you start building a rule-based model, and then slowly as you start collecting repayment data and other data for the borrowers and start building the models, you will have a running on, maybe you'll have initially, like Pavel said, 20% defaults, then 15, then 5, 4, and you can keep on reducing that. It's just, you have to be cognizant of these aspects, right? And like I had mentioned, right, we just crossed $1 billion in lending last month overall, but the fact that it has been a journey. It's not just one day or a week's work or month's work. It's been continuous work for last 7 years that we've been here to keep on improvising in it. And it's possible. I think these biases can be removed definitely overall, but work has to be done on it.
Mm-hmm. Claudia, thoughts to round us out?
I completely agree on the analytics and kind of it's really a question how you put together the training data, and there's definitely sufficient data to do that in a way that eliminates that bias. I'm more thinking about the first part of the question. So what can we do to basically increase adoption and design better for women? I mean, one thing that I learned from Women's World Banking, actually from Sonja and Mehi and the team, is that there are many accounts that were opened by women but that remain dormant, and so the question of, you know, kind of what can we learn about those that aren't going dormant compared to the ones that are going dormant, and what are the differentiating factors, and to kind of increase pickup and really think about, you know, kind of what works in certain locales and in certain contexts.
Thank you for that. Okay, Jacqueline, I'm going to throw it back to you for another question from our group.
Mm-hmm. Another question that came through is that many conversations have changed focus on women, but men are often in senior positions in financial institutions and government. And so how can we train regulators and senior management to identify gender biases and adapt it to create better services and products for women? Specifically, what 2 to 3 things could big banks or regulators do immediately?
Well, that's a fantastic question. So I don't know, Harsh, you look like you're dying to answer that one first.
No, yeah, that's been a prevalent question all along, right? Again, I can refer to my home. We have 3 lady members and 3 gen members, and I know who rules the house, right? Overall, so I think my answer would be overall to start from basically our home, where enough overall structures are provided, org structures are provided, opportunities are provided, encouragement are provided overall to those people. So we need to begin from home, where we need to start treating them as equals, making them work together, equip them and everything. So I think that's, so it basically starts with an individual and then goes to city, state, society, country and everything, I think. So I think that's what, if the question required is that we begin at home, equip them, and then maybe take it to society, and then ask regulator to do a lot of stuff over there. That would be my thought.
Thanks. Claudia, any additional thoughts on that?
I think I would also look at where the opportunities, or what are the incentives for those stakeholders? I mean, ultimately, even though I represent a foundation, in the long term, we don't want to think about this as charity, and I don't think it is. It's a business, and there's a business to be made, maybe not everywhere. And so the question is, where are those opportunities? Because I feel that, you know, people in commercial banks and people in senior leading positions, I think, you know, kind of what are the financial benefits, and can those be demonstrated if those market segments would be treated in a different way, could be a critical aspect of really making progress in these areas.
Pavel, anything to add there before we move on?
No, actually, I think I was saying my opinion before, so I very much agree with Harsh. Simply, it starts really very early, and how you motivate. And if you simply are saying this is the normal role for everybody, doesn't matter the gender.
Yeah. Okay, Jacqueline. Thanks for all the questions coming in from our participants. I know I see a number more coming in. So Jacqueline?
Yeah, we've received a few questions on the risks, specifically around data from women. So for example, how do we mitigate risks of financial institutions collecting GPS data on women for their personal security and safety? How do we think about disproportionate cybersecurity risks for women who may be newly included in digital accounts? And other questions around privacy issues.
Yeah, that's a different take on risks that we were talking about earlier. So any of our panelists want to jump in there? I think that is interesting, right? Especially for younger women, especially in certain countries, you know, location information, you know, that's a risk. But thoughts, Claudia?
Yeah.
Why don't I start with you, maybe?
So I'm not a builder of these tools, but clearly my perspective would be kind of identifying, working with women and communities to identify what are really the kind of the data and the insights that could be generated that put women most at risk, and then thinking about how can those be mitigated by, for example, being stored only short term, you know, kind of how are they being accessed, how are they relate to a specific use case. So what is the purpose of collecting certain data, and how long do they need to be kept? I mean, those are some of the elements, in addition to, of course, encryption. I mean, we have a lot of tools, but I think it's really about thinking about what are the different use cases that really put women at risk, and how can we specifically mitigate against those.
That's great. Thoughts, Harsh or Pavel, on that same topic?
Yeah. So, Janet, basically, I think we need consent-based architecture, right, all across our journey. I think for the financial information like banking data, payments data, social data, to a large extent, we moved there overall on consent-based architecture. For similarly, I think for using these kind of services with a GPS or any of those things, if that's basically required for insurance, right, and reducing your insurance rates, but that should be allowed basically. But I think we all need to move to consent-based architecture, right? So anybody who's sharing any info that's personal and that's related to him or her should first know that information is getting shared or used somewhere, and then a consent should be required from him. And again, the second thing, and we've been implementing this all across our journey, is the consent has to be a frequent thing. It cannot be one time, one life, everything, right? It has to be a frequent thing. We've personally been going and working with all our borrowers on a yearly consent, overall on things which we want from them, discuss with them, explain them of what we are taking, how we are taking. So I think awareness about these things getting used or getting recorded, one, and the consent-based architecture is super important to implement.
Yeah, I think we could talk for a while on consent-based, because I think there's a lot of you know, customers out there that have no idea, you know, what type of personal information about them, you know, is out there already, right? I mean, and once it's out there, it's hard to pull back, and so you may have been giving consent without really knowing. So I mean, that's a whole nother conversation. Pavel, I'll turn it to you, and then I think we probably have time for one more question for the group.
So I will try to be very, very quick. I very much agree it should be consent-based. And what the regulator should look at is if the consent is clear. That's it from my point of view. And the second thing, if somebody within the company can misuse the data, it's about all the operational risk management system, which these companies actually have, usually what I saw on very high level, because already today for the leaking, even though that we see Facebook and so on leaking the data, but simply the punishments are so high that the companies are really working hard to simply get into place all the operational processes the way that the data are well protected. So this is more about simply looking at this and pushing the environment to be more and more safe.
Thank you. And then Jacqueline, I think we have time for one more question. So you could sort through those that have come in and leave us with one last one from the audience.
Sure, I think this is a big question, but it did come up and it was mentioned several times throughout the panel about the challenges of cultural and social norms and how AI and machine learning can't always overcome those. And so a question that was put to all the panelists was what can be done on those issues that will help to drive greater financial inclusion?
Okay, why don't we go Claudia, then Pavel, then Harsh, and that'll round us out.
I mean, I think the question is in my view, definitely much bigger than driving financial inclusion. That is a kind of a side goal in some ways. It's really, well, about empowerment of women, and economic empowerment is one piece of that, and an important one. But I mean, I think honestly, there is no silver bullet. Having been in these spaces for decades, I mean, it's about advocacy. It's about changing laws. Also, often it's about education. I think a lot. We have already talked about this. It's about early education. I think having an educated mother makes a difference for the family, makes a difference for the kids that are then growing into different, often role stereotypes or role images. So those are some of the elements that I see, and having role models that are visible. I think also, honestly, kind of popular culture has a big role to play. I think, kind of seeing people in movies and television series. I think, the media and the arts have also a role to play in these areas.
Yeah, and one of the things I think about, Claudia, too, going back to this pandemic, when you talk about education and other things, we can only do so much virtually. We can only do so much, sitting from our work from home environments. And I know that, and I'll speak on behalf of Women's World Banking, we had great goals for ourselves in terms of things that we could be doing. And the pandemic slows that a little bit, just because of the inability to travel, be out in the field and whatnot. So Pavel, thoughts on that to round us out, and then.
Okay, by purpose, I will go to the financial inclusion because I think a lot was said on the higher level already. And for me, I will try to reiterate what I was already saying in my previous answer. It's, for me, the most important thing is the good balance between the regulation and simply what we are able to use to assess the reliability of the customer, particularly women in this case, because if there is too much regulation, it's simply creating the too much cost for any company. It doesn't matter if it is bank or fintech. And if you would like to drive financial inclusion for the people who has the fin file or no history, as it was mentioned at the start, you only can do it that you are giving him very small amount as a loan, very short term amount, and you are trying to assess his reliability to repay. And if you are imposing too much regulation, you are increasing the cost. It means this initial loan has to be bigger, and it drives simply that less people are included. So the balance here is absolutely critical for me.
Okay. Harsh, anything to add before we wrap?
Yeah, so Janet, I kind of agree with Claudia, and there was just one extra point to add from my side. And I like the fact that, like Claudia suggested, it should not be treated as a charity or something like that, financial inclusion, right? We all need to build it on as a business use case, right? So we have to view them as at par requiring products. And if we all think and build them as a business use case, which makes reasonable returns for people who are investing in technology, money, and financial services overall, that would be a more prudent way of looking at it rather than just designing products for the sake of doing it, right? The moment you start treating a particular gender or a particular class as separate and do something for them, and if a business use case is not identified, it won't scale up, right? So I personally feel that it's most important is to identify it as a business use case overall. And I think across our last 1 hour and all these presentations that we've seen, it definitely makes sense to build this business.
Thank you. Thank you. Thank you, Jacqueline, for helping us with the questions. Thank you, Claudia, Pavel, and Harsh for the discussion today, and for the audience. I hope we've raised some good thought-provoking perspectives on this subject that's of great significance to all of us. I'm going to go back to something that Sonja asked in the beginning of our session today, and she said, you know, where are women in the future of financial services? And I think we all feel certainly not prominently enough within financial services today. So thank you all. And now it's my pleasure to introduce Samantha Hung to you, Chief of Gender Equality Thematic Group at the Asian Development Bank. And Samantha, thanks for joining us, and you have the honor of closing us out today. So thank you very much for being there, and I'll turn it over to you. Thanks so much.
Thank you very much, Janet, Women's World Banking, and Sonja for your presentation, and all the panelists for today's really interesting and inspiring session. I think the discussion has given us a lot of food for thought on the power of digital technologies to boost women's financial inclusion and close stubborn gender gaps, but it's also reminded us of the many challenges still to overcome. From the Asian Development Bank's perspective, digital financial technologies such as AI alongside women's financial inclusion are two twin areas of growing interest for us, especially as we strive to support our private sector clients and government partners to build back better from the global pandemic. We have a corporate strategy 2030 rather, and under that, our target is to ensure that 75% of all our investments promote gender equality. And this is a very strong mandate and ambition, but it has opened new doors for ADB to explore innovative ways to get financing into the hand of women entrepreneurs. For example, we have been doing this proactively in Vietnam in a COVID context, and through a grant from the Women Entrepreneurship Finance Initiative, or WEFI, we designed a special COVID-19 emergency support program for women-owned businesses, and we are providing financial incentives to our partner banks under that program to restructure existing loans to at least 500 female clients and to lend more to female clients. And we're accompanying this with tailored capacity development support to help partner banks develop gender-sensitive financial solutions, conduct gender audits of their existing lending portfolios, and supporting them to strengthen their sex disaggregated data systems. ADB is also investing in fintech solutions to support financial inclusion, and we've been doing that even pre-pandemic. For example, we had an AI-enabled credit score system, which helped more than 8,000 SMEs in the greater Mekong sub-region to obtain credit of 50,000 each. And we also have an ADB-backed cloud-based banking app in the Philippines, which is contributing to financial inclusion, including unbanked women in remote rural communities since 2019. So I think, as we've heard today, AI and other forms of alternative credit scoring, they do offer really exciting new opportunities to overcome the traditional hurdles that women face in accessing finance. And it is one of the reasons why ADB is currently working with the government of Indonesia in developing consumer protection regulations and establishing an alternative credit scoring system as part of a multi-year financial inclusion program. And we see this as a growing area of demand for our investment, and we look forward to accompanying countries and our private sector partners in this digital transformation of their own financial systems. And we all know that these hold great promise, but I think we have also heard the strong caveats today. With weaker digital footprints and pronounced gender digital gaps across many countries in our region, combined with some of the biases built into AI technology that we've heard about, we know that women still face significant challenges and risk being left further behind. So digital technologies offer some solutions, but they don't resolve all the gender challenges, such as the stubborn social and gender norms that we've heard about. And the technology and use of data must be enhanced to avoid any inherent gender bias. So to conclude, moving forward, the ADB looks forward to deepening our engagement with development partners, like some of the people on this call on this topic, to coordinate our efforts in finding transformative and innovative financial solutions for women. Sincere thank you again to Women's World Banking for this timely and fascinating panel. And thank you everyone for your participation. Goodbye, keep safe and healthy.